Thank you for joining us for episode 97 of Northstar's Private Equity Fast Pitch. Our host, Jeff Henningsen, president of Lockton Companies in Texas, will be speaking with Deborah Smith, the co-founder and CEO of the CenterCap Group, a boutique investment bank. Prior to forming CenterCap Group, Deb was co-head of M&A and a senior managing director with CB Richard Ellis Investors. Deb has been involved in more than $100 billion of mergers, acquisitions, and restructuring transactions. Today they'll discuss how she became the leader she is today, from feeding cows and livestock as a farmer's daughter to the CEO of a major company. They'll discuss what types of real estate have investors excited. And Deb will explain the difference between senior living and active adult living, and why it might be the next big real estate boom. And now your host, the podfather of private equity, Jeff Henningsen.
Deb, I really appreciate you joining us today. I think this is going to be a very interesting podcast to our guests. If you would, take a moment, introduce yourself, and tell us a little bit about your firm.
Thanks, Jeff. Firstly, thanks for having me. I appreciate being on your podcast with you. My name is Deborah Smith. I am the co-founder and CEO of the CenterCap Group. We are a women-owned boutique investment bank that is focused exclusively on the real estate space.
For those that have been following the podcast for a long time, you're only the second real estate-focused professional that we've had on. The first one was a real estate investor, more of a private equity style investor, and you're on the investment banking side. Tell us a little bit more about what you focus on.
We have three different arms to our business. The first one is the buying and selling, essentially corporate level advice to real estate owners, operators, REITs, and investment managers. And over time, since we built the firm, that has really translated to the buying and selling of investment managers who have a big presence in the real estate space, as well as on the REIT side, doing fairness opinions and valuation work. We have a capital raising business that focuses more on separate account, joint venture, large institutional deals across the spectrum of real estate. And it's sometimes one product is more valuable or attractive to investors over others, but we tend to follow the capital. And so we have a placement business as well. And then the last piece, we have a pure consulting business that on the one hand works with investment managers on underwriting, valuation, investment allocations, and then on the other side works with real estate owners and operators. And it could be strategic planning, it could be how to access the capital markets, business planning, marketing materials as well. But across all of our business, our goal is to be the middle of the hourglass, to connect people who have money or capital to people who need money and have capital, and to sit in there and to be the connector between the two. You know, we've been doing this for about 13 years ourselves as our own firm. I think at this point, we don't know of anyone who does the exact mix of the products we have or has stayed straight right down the fairway in the real estate space, offering this combination of services.
And real estate is such a big area to focus on. Are there any key buckets of assets that you're focused on?
We tend to look at it in terms of, as you said, through products. And you obviously have your four food groups. I think over those four food groups over time, office, industrial, retail, and apartments, we've historically had something going on in the apartment space almost since we began the firm, consistently throughout periods of time. Whether it's advisory work, corporate work, it doesn't matter. Apartments have always been the stable. And I think the other three products, it's really been where we are in the cycle. Although interestingly, over the past 18 months, we've got 2 deals done in the retail space. You know, for the naysayers through COVID have pointed to the struggles that have occurred in the retail sector. That may be true, but as with all real estate, there's usually opportunity. It's just a matter of finding where in that product space there is that opportunity. So across all 4 of them, you can take any product and find niches in there or specific strategies in there that are attractive. And it's just a question of unraveling what those things are. And then the last bucket I'd make is that it's also the offshoots. So we love technology. I won't call it prop tech, but technology-driven businesses like co-working, co-living. We love how those things have been accelerated and really impacted both the office and the multifamily markets. I just come out with a piece on active adult living, another offshoot of apartments, which we really love. Logistics is another popular sector right now, which we've had the pleasure of getting some work done. It just depends. Once you get into these things, there's a lot more going on. And there's a lot more to look at once you peel back the onion and take a deeper look.
Sounds like you're in a very interesting spot where you get a purview or maybe a pre-look into where investors are really focused. And obviously you have great access to capital. What are you seeing as some of the more active spaces that investors and REITs are looking at investing in for the future?
We love cold storage. If we want to take industrial, we love cold storage. There's a lot of capital available for that product class right now in talking our conversation with investors. Logistics, it's these things that have come out of e-commerce. And so with COVID, to us, the biggest change has been that if you change consumer behavior, how does that fall down to all the product classes that we have? And when COVID hit, in many ways, as tragic as it is, for real estate investors, it was an opportunity, right? Because whenever there's chaos and confusion, it's for real estate that just is equal to opportunity. That creates some spread and that creates some yield. And pre-COVID, it was challenging because the market had become so efficient and so expensive. The change and the shakeup just created winners and losers and opportunities out of that. E-commerce, if you look at the impact as it flowed down and you look at shifting migration patterns with population shifts, you saw state shifts, you saw office patterns change. So you have flex work schedules, people working from home. How does that impact the office market? If you have more people at home, how does that impact where people are living and how they're going about their daily life? Well, if they're moving, where are they shopping? And then you have to look at retail and the impact of e-commerce. Well, if you look at e-commerce, well, how does that impact industrial and logistics? Thus, if you keep going down where we ended up with cold storage, which is you follow around the cycle, it is a particular class that has not had as much institutional focus historically. So there is a massive shortage of cold storage similar to apartments and housing in the United States. As a result, folks are gravitating to that space. And then you're left, who does it and who builds it and how do you get into it? Because as with most things in real estate, you require operational expertise. The property doesn't sell itself and it doesn't operate on its own. And so as a result, you follow those things through, and that's where we are.
Well, the one area that you didn't address in that, which I know we talked about earlier today, was active adult living. How does that differ from senior living, in your opinion? Because I know that was a big focus for many, many years. And with people living longer, senior living may not be the same. And I love that active living.
Yeah, so senior housing has usually been defined historically in terms of folks that are income challenged or elderly that need assistance, right? So even independent living, there's food service. There's services that you need that you rely on. And so the senior housing market has historically addressed those two things. Adult active living is really focused on folks who are 55 and above, and they are super healthy. They just don't want to own a house anymore. They don't want to deal with lawn mowing and broken hot water heaters. They don't want to deal with any of those things anymore, but they're incredibly active. They're very social, but they want to get out of their house. And so you can create apartment complexes that are very amenitized. It borrows concepts from the co-living and where amenitized apartment living has moved, and you make them amenitized, highly amenitized. So you can have greenhouses, horseback riding, you can go out and do yoga, and there's all these things. There is no dependency of having a food kitchen or a cafeteria or meal services to accommodate. Then what you have is, it's honestly, if you were 20, it's a boondoggle for the folks that are older and don't want to own their own home. And so that market is being explored. I don't think there's any magic formula, because you got to get out of the concept, well, senior living, if you speak to folks that are in the class I'm talking about, they don't view themselves as old. So don't call them old people, because they're like, what are you talking about? We're not old. It's a different market, thinking about the elderly or the older in a different framework. How do you come up with marketing that? Does it belong in senior housing or does it belong in the multifamily apartment sector? And then who do you operate it? Who do you sell it to? How do you brand it? How do you price it? And then how do you address the marketing to get folks into it? I think all those questions, a lot of folks are still trying to figure that out.
And I would assume, but I'm going to ask you because assuming isn't always right, but I would imagine that the active adult living, is it mostly in more of the Sun Belt type of regions, or is it all over the country?
Good question. It will follow where the elderly live, because a lot of times older folks do not want to live too far from where they already are. They don't. They may want to get out of where they're living, but they don't have an issue with their communities. So I think at the end of the day, you have to find location where you have some basis for clientele already in order to market to, in order to get them into those communities. And then they tend to want to be where near their families are. They might want to live in an apartment community, but that doesn't mean they want to live 3,000 miles away from their kids. I think there's a lot goes into that, but where we have been seeing them up is national. We see them pop up. And I don't know if I see the concept working in city, urban, too tight communities because you need some space, but it'll be interesting to see how the sector plays out and where the machinations go as the sector develops.
And you talked a lot about owner-operators, and I think that's an area that you identify and look to help them either grow through acquiring more assets or maybe sell to a REIT. Are there any other buyers like REITs out there for these owner-operators?
Look, in my world, if you're not a buyer, you're a seller. If you're not a seller, you're a buyer. Most folks are focused on growth. And so the question is how do you get there, right? It's do you go organically and you go it on your own, or do you look to do it through an inorganic strategy, which could either be acquiring someone else, it could be merging with someone else, or just a straight out selling to someone else. And I don't think there is a prescription that works for everybody that's universal. I think for us, when we work with operators, we tend to go in with a blank sheet of paper and say, okay, well, what do you got? What do you got? What's the organization look like? What are your goals? What are you trying to achieve? And then we'll take it from there. And the answer is different depending on who we talk to. Some folks, we have mandates right now where it's a straight sale. They want to sell, they want to move on and do something else. Sometimes they want to stay engaged. They want to continue to build the entity, but they just don't have the access to capital. They'll want to pursue that strategy. On a basic level, in all cases, they will come to us and say, well, what do we do? What do we do? And it amazes me that real estate people are super smart and they've accumulated so much wealth that it's humbling as an advisor. When it comes to this type of stuff, we've seen so much and done so much at this point, but to be able to bring them value in a different perspective is really awesome.
Deb, you talked about owner operators and how they're growing and trying to reach scale. Is there any similarity in private equity groups and the strategies that they're employing?
For real estate particularly, it was my wheelhouse, what we have actually seen over the past few years is the bigger guys are getting bigger, and there's a lot of smaller guys that are growing in the market, but there is a challenge once you hit a certain AUM. How do you get bigger? We have so much of the capital as now getting raised by the top 10 firms in the real estate market. The Blackstones of the world, the KKRs of the world are chewing up so much of that capital. How do you compete with firms that have scale? Because historically, and people can disagree with me, but flight to quality has been interpreted as flight to size. And if you're a pension plan or you're a corporate plan or a foundation or endowment, and you want to put out capital, we can talk about smaller guys and expertise all we want, but it is easier and more acceptable to make allocations to larger guys because then you follow the size. I think what we have found and where we come into play is if you're a smaller manager, how do you step up? How do you compete? And there's a few different ways that folks have been looking to do that. One of them is to recognize that we can't be an allocator and try and compete head to head with the bigger guys. Why don't we find a niche we're good at? Whether it's, should I be a multifamily manager? And then do I become vertically integrated if I follow that path? Should I be an industrial manager or a retail manager and become down a specific path to define who you are? We worked with a manager not long ago as a long-term client. We've had, 6-7 years. When we started working with them, they were a diversified manager. We worked with them for a while. We switched them over to be a multifamily pure player. Their last fund was $700 million that they raised, which is a huge credit to them. They're excellent investors. They have an amazing track record, but they switched things up and it has worked. For us, what we do is we go in and say, all right, well, let's step back. What are you good at? Let's talk about geography. Let's talk about product. Let's talk about your return profile you're chasing. Let's talk about your organization, your track record. Let's figure out what you're really, really good at. And then we're going to take that and we're going to craft around it, and you can raise capital around that, because you can't be everything to everyone. So you have to figure out how to distinguish yourself. That's where we have found get some traction, and stick to your knitting. Don't try and be everything to everyone, because you can't win with that strategy. You just can't. It's way too difficult. Then you can follow through that path and then look to raise capital. But you should also expect, as with most industries, I think, real estate's very relationship based. It's a lot easier to raise capital with people you know and people that already know you, because it takes so long to build relationships with new investors. So that's an easier path. But if you don't have those relationships, then you're in for a long haul, and it can take a really long time to raise funds. So as an alternative, you may want to look at instead is go down a separate account or a joint venture strategy where you partner with an institution, allow them to participate and be more active in that relationship. And then you can use that as a stepping stone to the next layer of potentially raising a fund or wherever else that you want to go, and try and bifurcate that strategy to test the waters, because sometimes you've got to take a few steps before you can take the massive leap, because those things just take too long and they're expensive in order to achieve.
That was an awesome explanation. And I'm curious, are there any size levels, high or low, that you're focused on as far as your capital raising and types of assets that you work with?
We have historically focused on 5 billion AUM and under has been our wheelhouse. And there's a few reasons for that. Is that as an advisor, we don't have a balance sheet. We are a pure third party. So it's always going to be challenging for us to compete with the Morgan Stanleys and the Evercores and some of these big guys that actually can do lending too. We have focused in that slug of market where you're dealing with other boutiques that similarly don't have a balance sheet. And when it comes to competing on that basis, then it's a pound for pound, and we can compete on our track record and our ability to deliver. What we have found, though, is that we are definitely etching up. Our clients are becoming the PIMCOs and the VEENs, and we're working with Invescos of the world. They're becoming much larger, and our transactions are much larger. And I think that's on the back because we're getting stuff done. Now, and as we move up, we're finding that that mid-market tier is slowly disappearing because everybody's acquiring them. There are a lot less 5 billion managers today than there were 5 years ago, without question. We've upsized, our clients have upsized, and our relationships have upsized. We're coming back almost where we were when we were REIT bankers at Lehman, or the crash with Lehman, where we're dealing with a much higher caliber firm, and that has moved us up. But even at the topper end of the market, there's a lot less players, because what's happened is the Blackstones and Invescos have gotten really big. Then the middle market has been acquired, and then the smaller guys aren't there yet with enough scale. And it goes round and round. You grow a company, you build a company, you sell a company, you start all over again. There's definitely a little bit of that. So there's a lot smaller managers than there used to be, but that mid-tier is a lot more challenging now because there's a lot less players in it.
This is a perfect segue. You mentioned Lehman, and I really want to go back in time and have you really tell us how you got here. And it doesn't sound like you have a Texas or a New York or any other accent that I'm familiar with their accent, but tell us even maybe back where you grew up.
I'm Australian, although I have been mistaken, which I find hilarious, for different parts of the US. And to me, I sound nothing like people in America, but nonetheless, all South Africa or from the UK or even New Zealand. I grew up in Australia. I grew up on a dairy farm in rural Australia, with no ambitions at all to go to college, not on the radar. College was not even a conversation. Most people where I'm from dropped out in grade 10 from high school. I very fortuitously, I think it's the story of my life, is I fortuitously was moved to a school close to Sydney. And I had an amazing teacher, my economics teacher in the 11th grade, who talked to me about going to college, and who had to really help me through that process because I didn't know how to go about it. I actually went off and did economics law at Sydney University. And again, fortuitously applied for a job in investment banking, which I didn't know what banking was either. And I fortuitously applied and got the job. I got on a plane and I moved to Melbourne in Australia, which is where Morgan Stanley had its operations at the time. And the rest is history. A whole bunch of fortuitous events. They moved me to the United States on a lips notice, on a phone call's notice. And I showed up in the US to a closet that was my desk, and no one knew who I was or why I was there. And the rest goes on. So I stayed there. I've met some great people. I started in the utilities practice, which was a phenomenal group, a phenomenal firm. I had the best experience anyone could have as a junior person in banking. I'm hugely grateful to the firm. And I stayed on. I didn't go back to Australia. I moved around to a couple of different banks with my partners, actually. We've been in contact for almost as long as I've been here. It's just all step by step. The next thing came up. What I've been good at, honestly, is recognizing open and closed doors. It's recognizing when something has come to me, whether I should take advantage of it or not, or let it go. And recognizing when something's not working, to stop doing it or change gears, no matter how much I love it. If it's not working, it's not working, and cutting my losses and moving on. I'm very much a gut feeling person, and I've trusted it my entire career, and I tend to go with it. People talk to me about planning and what's your 5-year plan. I'm not the biggest planner. I set goals for myself based on what I'm doing. I set those objectives. The problem with being overscripted on plans is you miss those open and closed doors because you're too busy trying to focus on getting to the end of the street that you thought you were going to. So as a result, I've kind of followed these things along. But I can tell you, sure as I'm sitting here, that 20 years ago when I started at Morgan Stanley, that I would own my own firm, still be doing investment banking 25 years later, I probably would have laughed at you. I can't imagine. That was the goal. But even starting out CenterCap Group in the last financial crisis, there was no grand scheme plan. It was a concept that we saw an opportunity in the market. Let's give this a go. And a call came in from a big law firm that said, hey, I think these guys could use your help. They were an investment manager. They were buying over another investment manager. And they said, well, I think they need your help. Okay. And then the rest follows from there, because once you start down that path, then it's, well, how are they going to pay you? Well, then I need a bank account. Okay, then I need a company. And then we need an office space. And then we need people. And the list goes on. And then one day you wake up and you have 3 divisions and you're running this company that's been around for 15 years. And we've raised billions of dollars of capital. And I look back and I'm like, it's just a really interesting path. I think I've just been lucky that I've had really amazing mentors without them knowing they were mentors, who've said things to me over time and they've stuck with me. I keep thinking back to all those times now that I'm old, as super appreciative for the amazing guidance. And I don't even think they thought they were giving me that amazing guidance. It just turned out to be guidance, which has led me through where I am today.
It sounds like you're somebody who, and I've explained this to some folks about myself sometimes, that a lot of times you just have to have your antenna up and listen. And I was kind of cracking up when you were talking about starting your firm in the middle of a pandemic. You also were with Lehman right when they went into their problems. You must be a glutton for punishment or something, or a magnet for punishment, I guess. But
I left Lehman before they crashed.
Oh, okay. I saw you were there
that
in
makes me
07.
smart.
Your antenna said leave.
An opportunity luck. Reality is, I thought I was going to stay at Morgan Stanley forever. I loved my job. I loved the firm. I thought when I moved to Wachovia, I thought I was going to stay there. I moved to Lehman. I thought I was going to stay there. But things come up. It's not so much I was looking for these things. They just come up. I was just smart enough to or lucky enough to be in the right place and take advantage of some of these things, but then adapt once I've got my claws into it to figure out how to make the most of whatever the opportunity is before me, and then to adjust the opportunity to make it better than what it was when it presented itself. That's what I've done, even to get to where we are as a firm today, is to keep doing those things. I never second guess myself, ever. Never second guess myself. Once I make a decision, I'm done, I've moved on, and then I'm on to the next thing. Because, life is too short. I think I'd drive myself nuts if I sat down and said, maybe I should have, would have, could have. I just don't do it. And I just keep moving forward. Every day is a new day to do something amazing and to do something new and create value. And that's what I wake up every day. Love doing it.
So it sounds like there were many influential people in your life. any that you would term as a mentor, or were they just people that you were with a lot that you listened to? How did that play out?
I get often asked one of the guiding principles for me. And I had a professor of economics who's since passed. And at the time, I don't think I appreciated what an extraordinary impact he had on my life until I got older. And now I look back, I've thought about him so many times and the impact he made in my life, and sitting in his office, which was cluttered with books, paper everywhere. And I'm an economics student. I was lucky enough to be an associate lecturer when I was in college in the economics program where I was doing my own honors degree. And I used to go and talk to him and say, well, what about? And I'm not sure many college kids do that now in retrospect. He said to me when I got my job at Morgan Stanley, and I said, you wouldn't believe I got this job in New Zealand. And he turned around and he said to me, he said, you know what, Deb, let me give you 3 pieces of advice for you to carry on when you go off. I said, okay, what are 3 pieces? And I remember them still to this day. He said, never tell anyone how much money you make, ever. Never tell anybody. Number 2, never say anything bad about anybody because it gets you nothing, right? Never do that. And 3, what got you here will get you there. You got who you are, got you this job in investment banking. So stick to who you are and great things will happen. And so I've kind of stuck to those things throughout my career. Remember where I come from. I know my dairy farming background is in investment banking, but it fundamentally made me who I am and the character traits that got me to where I am. I'll be forever grateful for that, even though I will never go back to milking cows. I'll be forever grateful. But they were 3 pieces of advice I've stood by to this day. Stick by my advice.
It's interesting. I've talked a lot about mentorship with a lot of my guests, and it seems like there's so many young folks that are asking people to be their mentor, where the best mentors are the ones that mentor you with advice like you received from your professor, and you never asked for it, but you listened to it.
Yeah. And there are plenty of those. I can go through every firm I've ever worked at, and even in my personal life, where things have been said to me or their relationships, and something they've said meant less at the time and have meant more upon reflection. And I think mentors are super important. To me, a mentor is someone that you have a relationship with. It shouldn't be forced. It just is. It's someone you talk to and someone you bring into your life that has your best interests at heart, that really wants you to be successful. And finding those people, it's relationship driven. I didn't know my professor was going to be my mentor. I didn't even know what a mentor was back then. Do I think about what a mentor? No. Did I go looking for it? No. And I've had those throughout time at all these different firms for the same reason. I never went looking for these people for counsel, but I guess what I did do is when I wanted some advice, I went and asked, or I would invite people into my thinking or invite people into what I wanted to do. And I think on all of them, people will invest in a relationship if you're willing to invest in it too. If you're willing, you can't have a relationship that's one-sided. You have to invest something in it, whether it's because it's someone you work with and you work really hard. You do the best job. You make yourself indispensable to that person. They become vested in you, because that's what mentors really are. The people who are invested in your success, and for no other reason that they want you to do well. And I think that is come because you've invested in the relationship too. So my professor, I'd go and see him. I didn't really always want anything, but something was going on or something happened, and I would go and see him, and he'd sit there in his office. He was so much older than me that these impacts, I don't think I gave them the credit for what they were worth at the time.
While we're on your college years, what advice are you giving to young professionals, hoping that many of them come and talk to you because you sound like you'd be quite inspiring to them? What advice are you giving to young professionals that want to get into the private equity investment banking space in the real estate world?
Again, I had another great mentor at Morgan Stanley who gave me a wonderful piece of advice. Once again, sitting in his office, having a conversation about something. I can't remember the conversation. And I remember we're sitting at his conference table, we're looking out the glass window as people were walking past his office. And he turned around and said to me quite randomly, he says, you know what, Deb? I can help you be successful, but your career is yours. It's up to you. What you want to do with your life is on you, and I will help you any way you can. But at the end of the day, you're responsible for it. And it stuck with me because Now I look back, that's why, again, it all plays into mentors. So for college kids, if you want to get into banking, you got to own it and take responsibility for it, and then go out and look for it. What do you need to do? Start talking to people, right? Start doing your research. Don't take no for an answer. If you want guidance from someone, go and push and ask, and all those things in school and in college. If there's a professor you like, go and talk to them. Focus on building relationships, because if you want to get to where you're going, people will help you if you're vested in the relationship, but ultimately it's on you. Nobody owes you anything.
I love that. I really love that. You seem like somebody who has quotes and mottos and all kinds of things you share. Anything that jumps to mind that's your favorite?
I'll tell you something I tell my kids, and my kids can tell you this. I must say it nearly every single day. Beyond, I'm just trying to get through the day. When they ask me something and I haven't done it, I'm just trying to get through the day. What I often say to them, and it's the same mentality because I have 4 kids, it's, you know what? Once you make decisions, really you have to move on. So in our house, the most common line you will hear my kids say, why are we talking about this? We've already decided, haven't we? It's the common thing. Once we've made up our mind, we've made a decision, we've moved on. So many people second guess and review and go over and are indecisive about things. Take a risk. Go with your gut feeling and just go with it, right? Just go with it. Don't look back. And whatever happens, the chips will fall where they may, and trust you will figure it out. And if something goes sideways, something go wrong, trust yourself that you will figure out what you're going to do with the mess when you get there. But that's what you'll do. I tell my kids that all the time. I tell the people I work with all the time. Why are we still talking about this? Let's move on. Let's move on to the next thing. And if this doesn't work, it is what it is, and we'll get through it.
I love that too. And nobody's even come close to mentioning something like that. For some reason, it reminded me of, I think it was Sarah Blakely said that every day when she came home from school, her father would ask all the kids, what did you fail at today? Which means you got to make decisions quickly and then live with the consequences of whatever you decided to do.
That's right. I mean, look, I have a house full of athletes, and one of the things I always say to them, if they are unhappy with their performance and they're very focused, they're very driven, and if they're not happy with the performance or something didn't go right, they come up and say, well, you know what, if you don't like the status quo, you get out and change it, right? If you don't like the way something is working right now, you get up and you focus on what do you need to do to change the outcome. If you don't like the one you got, sitting here and whining to me about it isn't going to achieve anything. You got to move forward, figure out what needs to be done, and then go with it. Forget about looking backwards. That game is over. It is done. You got to move on to the next thing. You kind of have to do that because everyone is so busy and we've all got very, very busy lives. And I think if we do more of that, you'll sleep better because you don't have as much pressure on your shoulders. It's so much more time efficient because then you can just move on.
I've had a couple podcast guests who grew up on farms, and the talk track with all of them is, on a farm, you make decisions and you move on. You can't wait. Farm life and farm parents are much different than some urban parents who are, raise the soccer mom kids or something like that.
It's funny because someone asked me, and this one really a few years ago really got me thinking about my farming background. When I went off to college, I was a farmer's daughter, and everyone in college was different than me. They had much different upbringings than I did. And it was a big adjustment. It was a really big adjustment for me. And I remember thinking at the time how the challenges that every morning I had to get up at 5 a.m. and go out and feed calves. They needed to be fed. Someone has to do it. And that was my job. I'd come home, I'd make breakfast for the family. I'd go off to school. I'd come home. I played sports. I'd go over and do it again. Then I had to do my homework over and over and over again. And as a farmer's daughter, you don't get days off. We didn't go on vacation. We didn't go skiing. We used to go to the stores once a month to go pick up extra things. And it was a big day. We'd get in our best clothes to go to the stores. I look back, but that lifestyle, I get up at 5 a.m. now. It's like, so maybe I haven't progressed, but it's that concept of hard work and having deliverables, and just, it has to be done. These things have to be done, and not to spend a whole lot of time of whether I want to do it or whether I like to do it. Sometimes in life, you just got to do it. So you might as well suck it up and keep moving forward, because I had to do a lot of that. But the ultimate reward of getting it done and having something to show for your effort, to me, is one of the most inspiring parts of my day. The deliverable, It's being complete and finish what I start is enormous joy. And I think that probably drives me. But where did I get that? That dairy farm. Who'd have thought? The dairy farm. Yes, I probably would have turned out different in a different upbringing, in a different life. We'll never know. It's very much, I think all of us are a product of where we come from in some shape or form, just depending on how much we want to embrace it.
You have to work. You have to work your tail off.
Yes. And honestly, to be the best, whether it's getting A's in class or doing well in a sport or even washing your dishes, in order to be really good at something, takes a lot of effort, because if it was that easy, everyone would have it. If you want something, you got to work really, really hard, because there are no freebies in life. Unless you're really lucky, there are no freebies. So you're going to get off your butt. You got to get out there and you got to practice. It's a lesson I've raised my kids with. It's a really value of hard work. Once they're off to college, my job will be done if they've learned that trait. If they've learned that, my role as a parent, I think I'm the most successful parent in the world if they've done that.
Deb, this has been really fun. And I think you and I could talk for hours and hours about raising children and psychology and all kinds of fun things like that. But why don't we finish with the question I always ask everybody? There's tons of investment bankers in every category that you can imagine, including real estate. If I'm a owner of an asset or a REIT or somebody looking to hire a firm, obviously there's a lot for me to interview. If I'm at home trying to make a decision tonight on who I'm going to go with, what are the key things that you need me to remember about you and your firm that would tip me into the direction of hiring you to help us with whatever we're trying to do?
Yes, it's an excellent question, actually. Most banks have great track records. Most banks have done a lot of deals. Most banks can position themselves, because we're good at marketing, that's our job, is to come up with the basics on which most of us could be hired. I think the reason we get hired, and what I think separates us, we view ourselves as life cycle bankers. A lot of our clients we've had for a really long time. And once we get a client, they tend to stay with us and we become full service. We've had some of our clients have been our clients for 10 years, almost as long as we've been in business. And those clients have referred other people to us, and then the referral businesses come to us. We will take a client through, could be strategic alternatives, then it goes to capital raising, then it could be an M&A transaction, and then it could be another M&A transaction, and we start all over again. But the average tenor and probably the average number of deals we've done in our client is well above one, well above, it's multiple. And so we really value the relationship. We lead with relationship. And of course, we need to get transactions done. That's how we make money. But we always believe there's multiple ways to get something done. We will offer menus and we will offer multiple ideas. We're known for our creativity. We're certainly known for working on the complicated stuff. Anything that's complicated, is nuanced, is deal structuring, tend to come our way. But if that was the one thing, I would say, well, look, and we just want an assignment on this basis, is that because we can help them with this assignment, but they want to keep working with us on something else as the next step after this. And we view ourselves as all things real estate. And that is our motto. It's written all over our website, on our LinkedIn, that we are all things real estate. And we want to be a full service real estate solution to whatever companies want to do in order to grow.
I've really enjoyed this and look forward to staying in touch and watching you continue to grow your firm, and maybe touching base in about a year, because I know the real estate market seems to be going through a really nice uptick right now with all of us coming back out of COVID.
Jeff, it's been fun.
Thank you for listening to North Star's Private Equity Fast Pitch. For more information about Fast Pitch or North Star's boutique heavy hitter events, you can visit us at enorthstar.com.